Well, good morning, good afternoon, good evening, depending on where you are. Dan here from California, and thank you for joining me on our weekly session about real estate investing. We do it on every week at around 10:30 or 11 a.m. Pacific time, and the whole purpose of this session is to thank you, Mayor, thank you very much, is to engage, is to communicate, is to educate you guys, real estate investors or real estate investors wannabe, about different aspects of real estate investing. For those of you who wonder why I speak in English and not in Hebrew, is because we do it open to the public and we get people from different parts of the country and actually other countries in different languages, and also people watch this in the recording. So that's why we do it in Hebrew. In English. For those of you who are interested or primarily want to hear me speak in Hebrew, I run my own podcast in Hebrew. I have two podcasts, one in English and one in Hebrew, and you're most welcome to search me on the different applications for real estate investing in Hebrew or in English, and to listen to all my presentations or my conversations where I talk about real estate investing. So you can definitely, here we have a little guest here. Hi, it's my son. I just wanted to say hi and good luck. Bye, guys. Summer has started, so we do it on a weekly basis, and you can consume. So this session goes on Facebook, right here, and YouTube, right here, and on an English podcast, and we do have session on the Hebrew podcast, so you can consume. And my style, I hope so, is thank you. My style, I hope so, is very teaching and communicating and sharing, so you can benefit. Of course, it will be great that if you not only benefit from what I'm talking about, but also participate by asking questions or participate by commenting. And even better, if you can participate by engaging with us and becoming our clients who buy real estate. That's what we do for day in, day out. Just so you know. And by the way, if you want to get to see different opportunities that we have to offer in different areas around the country, around the US, that's what we focus on. You can share your email with us. We can add you to our mailing list, and then you will be receiving the different opportunities that we constantly harvest and look for and search, so you can benefit from that, right? So that's what we do. Great, 3-minute pitch. We haven't started yet, and then let's get started with today's topic. And usually I bring topics that I find interesting or something that comes up throughout my work week. And I say, okay, if someone asked about it, I want to share my thoughts about that concept, obviously related to real estate investing. Today, here's what I'm going to talk about. Every once in a while, I get someone who talks to me, either a new investor or someone who's actually already investing and lost kind of focus. And they say, Danny, here's the situation. We purchase 1, 2, multiple properties with a mortgage in the US, maybe with Simply Do It, my company, maybe by ourselves. And here's what we are thinking or not sure. It so happens that all those properties are generating, because of the mortgage and all the expenses, something around, let's say, $200 on average per month in cash flow, right? So, and it says, what am I missing? Or someone who doesn't really know, it says, what am I missing? Why would I trouble and make all this effort and energy and only to generate $200 a month on average cash flow? And anybody who says that, I think you're missing the bigger picture. That's my opinion. You don't have to agree with me, of course, but that's my opinion. Because here's what we should be considering. See, buying real estate, the type of real estate we like, I call it the most boring real estate you can probably have. I love boring real estate. Boring real estate for me means it's not interfering with my lifestyle. It's easier to do when I am traveling and working and have a family life and maybe from another country. For me, boring real estate means that there's nothing exciting about it. We have a renter. Usually, the type of properties that we like are in good schools, and the renter is usually a family with kids and a dog, and they can make, they can. They don't have to struggle financially. They're not necessarily wealthy people, but they don't necessarily live literally paycheck to paycheck, and they can pay rent on time and avoid issues. That's what I love, because this setting, this scenario creates a setting for me where the property or the investment is what I call in the background, right? Mostly in the background, right? But this type of investment with the mortgage comes with a price of a low cash flow. Okay, so if you look focusing on the monthly cash flow of $200, you're missing the point here. This is a retirement vehicle. In a way, it's a slow growth mechanism, because what's going to happen in 5, 10, 15 years, while we have this, boring type of real estate, is the following. Typically, no guarantees, but typically this is what happens. Over the year, the value of the property will go up, may just creep up, right? Sometimes we'll have years with a higher appreciation rate, and sometimes we'll have years with low appreciation rate, and may even have years with, the value will go down from where it was, not necessarily from when we purchased. So it may do something like this over time, right? Historically, real estate tends to appreciate more, on average, more than the inflation in this country. So let's just say it appreciates on an inflation plus rate. I don't care if the market is doing 10% or 8% now. That doesn't, that's a speculation. I'm just saying, inflation rate plus is what we've seen happening, actually more. But let's just keep that just a little bit. Remember, when you buy with a mortgage, you put so much down to buy so much assets, right? So we put, let's say, $25,000 to buy a $100,000 home, or just, I'm rounding the numbers, right? But the appreciation works, even 3% a year, works all over my asset, all over the $100,000 asset, not over the 25 that I put. So right there, we have a nice return from appreciation on a full asset that costs us only that much. That's number one. Number two, the monthly mortgage, the monthly cash flow reflects all my actual expenses: vacancy, repair, property taxes, insurance, property management, leasing fees, maybe some other fee that I'm not mentioning, plus the mortgage payment. And the mortgage payment includes in it principal and interest. Even if it's not equal, over time, we are reducing the principal amount that we owe, right? So that means in 5 years, we owe less money, in 10 years, even less. So we have a little bit of a gain of a return on investment by the fact that we are paying down the mortgage principal. Remember, the principal is money that it's not ours when we borrow it, because we borrow it, and becomes ours after we pay it. It's not in the pocket, right? It's in the walls of the house, but we are building equity by paying down the mortgage principal. So my cash flow reflects the fact that I'm already paying down my mortgage principal. So number two, not on just appreciation, which is number one. Number two is that we're building equity by paying down the mortgage principal. Number three, we have the cash flow. We may start in the first few years at a $200 cash flow, but historically speaking, over time, cash flow or rent tend to creep up, right? Crawl up slowly. They don't jump up. It's not something that we typically see goes by 2, 5, 10% annually. It usually goes by steps. It goes, maybe for 2 years nothing happens, and then we increase it a little bit. For two more years nothing happens, and then maybe increase it or not, and that changes. And maybe there'll be times of dips and not going up, but generally it goes up. When the rent goes up, and even some of my fixed expenses such as property taxes and maybe insurance go up as well, the mortgage payment does not go up. So that means my cash flow slowly increases, right? And if we're looking at one house, $200, not interesting. One house, $200 per month, annually becomes $2,400, right? In the first 1, 2, 3 years. And then it goes up to maybe $300 a month, and then $350. Over time, it goes up. So let's look at the long term and not at the short term here, what this property will do for us. So if we're kind of minded on the cash flow, I understand. Why would I? But if we're seeing what this asset can do for us, especially if it works what I call in the background, That's an amazing proposition, in my opinion, right? So that's what you should be really focusing is what I'm doing here asset-wise, and what kind of an impact this piece of asset can do on my life in 5, 10 years from now, and maybe 2 or 3 of them, how much of an impact they can have on my life or more. That's that's the ingredient. That's what we're looking for here. So don't focus on the cash flow. Yes, absolutely. You know what? Let me tell you 2 things. One, for me, the cash flow, I look at it as a bonus. It's a buffer. It's a cushion, right? I want to make sure I have some cash flow to offset some unexpectancy or so to leave some buffer, but it's a bonus or a buffer. So the cash flow is a buffer. It's a bonus. If we're really focusing on that, don't do that. I fully understand. The second thing I want to say is that even if you really translate the cash flow to the amount of effort you put in, you will see that $200, let's say on average you spend 2 hours a month on that property, right? Once you purchase it, 2 hours a month, which probably you won't do more than half an hour on average a month, right? On average. So let's say even 2 hours a month. That's what it costs you. So you spending 2 hours a month and you're collecting $200 for those 2 hours of effort. $100 an hour if we want to measure it this way. You know what? Not necessarily a bad proposition, right? $100 an hour. It's not a bad one. So remember, and again, I don't care about the $100 for an hour. I wouldn't do it for that, right? Because it's not worth, the energy. But when you see the bigger picture, when you see a little bit of appreciation, mortgage pay, paying down the mortgage, rent goes up, all of a sudden it looks a little bit different. It's a patience game. And this property, if you buy it correctly and you buy the right area, will pay off itself big time, right? No guarantees, but I've been doing it for so many years. I see the impact it has on people's life 5, 10, 15 years later. And that's where, it comes, into play. So, so that's why I wanted to share that with you. Cash flow every once in a while. By the way, I have investors who invested with me, and every few years, or every other year or so, they come up and they say, "Hey, Danny, what am I missing?" They need the reminder of that we're not doing it for the cash flow. It's a long play. Be patient. This type of real estate loves one thing more than anything: time. It loves time. Give it time. You know what? Even if you buy a property now, today or in the next month, you will not see the financial impact in the next 2 to 3 years. Only after 3 years, all of a sudden, that property kind of started, it's actually generated nice cash flow, not amazing, but nice. And it appreciated a little bit, and it did this, and it's in background. You start appreciating the value of that proposition, long-term proposition. So that's what I want you to take from this call. Don't focus on the small numbers, because this is not a vehicle for the small numbers, right? If you are focusing on the cash flow, by all means, go and buy those cheap $50,000, $60,000 properties that are rented for $800, $900 and enjoy yourself. Usually, you'll need a very strong stomach for that, right? This is the opposite of the boring investment. Those properties are typically good with cash flow on paper, and not really good, and create a lot of noise in your life in terms of tenants turnover and repairs and all of those things that are, kind of creating noise when you own properties. So just want you to be aware of that. Some of the investors that I know who deal with that category of the cheaper properties, they say, yes, it creates more noise. You need a better stomach for it, but there is a bonus here of the cash flow. By all means, those are not appreciating much assets, but they're good, strong with cash flow. I'm not looking for that, because I am focused on boring investment, or as boring as possible. My wish for my investors is that we can get to the point that you buy and forget rental properties. So that means it's kind of what they used to call, checkbox money or whatever. It's not that. We're not there yet. Slowly, I feel that we're making progress to that point, but it's in the background relatively, and it's not usually consume your time, with dealing with those properties. So that's everything I wanted to say about cash flow. Remember, long-term is the game here. Be patient. And with that said, before we wrap it up for today, I want to get some feedback from you. tell me a little bit. First of all, thank you, Jim, for the feedback. You're awesome, man. I like working with you as well, so I appreciate that. All of you, I know I recognize some of the names. Even one of my colleagues is here. My clients are here. So by all means, guys, put your questions, put your comments. Tell me what you're taking from this conversation. I would want to get your intake or your feedback here before we move on. So I'll wait for another minute or two or three, or no, maybe one or two, see if there are any questions, comments coming in. And if there are, I'll be very happy to take them. And if there aren't, then I'll be wrapping it up for today. If there are no questions, I'll start quizzing you. I'm just kidding. Don't worry. Okay. While there are no questions, or maybe if questions are coming, few things. We do these sessions typically on a weekly basis, usually at 11 a.m. Pacific time. That's California time. Today I had a meeting that I had to do this earlier. So usually we do it on a Friday morning. You are most welcome to send your suggestions, questions, something that you are wondering about and wanted me to tackle and respond, which I do anyway. Sometimes you don't even know that you're asking a question and it will show up here. I never reveal the source. I just use that. By all means, do that. If you want to speak with me in a more intimate environment, online or face-to-face or phone, I do it day in, day out with pleasure. Give me a call, send me an email, go to our website, all works. Let's set up a time. We can talk. We can take this general strategy and kind of put it down to your level of investment and try to see if this is a good fit for you. We work with US-based investors primarily, but we work with investors from Europe and other countries as well. Sometimes we help them with mortgages, and sometimes we help with other things. So by all means, that's what we do all the time. So thank you very much for participating, joining, watching the live, listening on the recording. Like I said, this is going on YouTube, on Facebook, and on podcast. Podcast is right here. So you can consume this or share this with others and consume it however it's best for you. I want to say thank you for taking the time, and thank you for joining me for another session. I hope to hear from you soon or see you on our next session. Have a terrific rest of your day, terrific weekend. Shabbat shalom, everyone. Bye-bye.